Good evening. Welcome once again to the Ghana Report. This show is live every Monday night from 9 p.m. on Varsat 1. My name is Bernard Koku Avle. We have an exciting show for you tonight. We'll be talking about the world economy, Africa, and Ghana with some two fascinating guests. This show is interactive. You can send me an email at report@bernardavle.com, or you could tweet at us. Remember to use the hashtag #TheGhanaReport. When we come back, you'll know who our guests are for tonight. Welcome to the Ghana Report again. Tonight's show is going to be very exciting because I have two very interesting persons. Our first guest is Robert Tashima. He's the managing editor for the Oxford Business Group. They produce intelligence reports on over 30 countries globally, over 400 pages on everything from politics, business, power, and life. They have done 11 reports on Africa, and of course, Ghana is prominent. Robert Tashima travels far and wide this continent, and you give us some useful insights on the continent. Robert, welcome to the show.
Thank you very much, Bernard.
It's great to have you. I also have my good friend who is a financial analyst and also a writer. He has an interesting blog called Critical News. Sydney Casely-Hayford is our guest. You'll give us some local grounded context to the conversation. Hi Sydney, good to have you.
Thanks for being in this studio with all this lovely lighting. Bernard.
Robert, you have a very interesting position. You are the managing editor for the Oxford Business Group.
Yes.
And you're in charge of Africa. That's 11 countries. What does OBG do in Africa?
Well, Oxford Business Group, as you pointed out, is a global research and publishing house. And what we try and do is produce annual economic and investment reports that communicate the dynamism that we see in emerging and frontier markets like Ghana, like Nigeria, like South Africa, like Kenya, as well as in Asia, Latin America, and the Middle East. And we've been in Africa for about 14 years now, starting off in Egypt and then expanding from there. And it's been really exciting to have this position at this particular point in time because the perception of Africa from the international investment community has really dramatically changed over the past decade or so. And that's been, I think, most noticeable in countries like Ghana, where previously, if you had talked, let's say in 2000, to a multinational investor and said Ghana's a great investment opportunity, the skepticism would be visible on their face. And that's certainly changed. You know, people talk now about Africa being the next frontier, about Africa rising. What we're trying to do is to show people how to navigate those opportunities, because it's not simply some sort of gold mine opportunity. It really does take time to understand the markets. It takes information, transparency to know what's going on. And so what we're hoping to do is to provide the data necessary for those so that people can come in and can help Ghana develop.
So what kind of information do these reports have about a country like Ghana?
Well, we try and cover the breadth of the economy. So we take a look at everything from macroeconomic indicators to the industrial sector, to energy, to power, agriculture, education, and health. We really try and cover sort of all of the main GDP contributors in the economy. And we do that through primary source research. We have a firm belief that you can't really understand a market that's as active as Ghana's without actually having people here on the ground. And so we have that. We have a field team that's here almost year-round, and they speak with stakeholders in the public sector, private sector, civil society, to really try and get a good understanding of how people who actually work here, how people who actually live here, how people who actually do business here see the economy, see the opportunities, and see the challenges.
So who buys these reports? Is it government? Is it multinationals?
It's a wide mix. There are financial institutions, there's direct investors, governments certainly, both Ghanaian government as well as embassies and diplomatic missions here. Chambers of commerce also use it, academic think tanks. So it's a wide audience that we're writing for. Ultimately, our objective is to really communicate with an authoritative and accurate bent what's happening in the economy.
So how different is what you do from the likes of Moody's on the one hand, Fitch, versus, say, Economist Intelligence Unit, or Standard Chartered Bank, or Renaissance Capital? Where do you play in that mix?
Well, I always have a tough time describing this because we fall somewhere sort of in between those. We try and provide accurate, credible data, but we also try and make that accessible. And so what we want to do is actually be able to communicate to as broad an audience as possible what's happening. And sometimes the best ways of doing that aren't with several Excel spreadsheets of numbers, but actually with a narrative that can be clearly understood and gives people at least an overview of what's going on. These reports that we publish are intended not for someone to be able to make a holistic decision about whether to invest in Ghana, but to at least give them a snapshot of what's happening and hopefully incentivize them to take a closer look at what's going on.
Sidney, you're looking very bemused at our guest.
I'm actually enjoying what he's saying. It's
Do you
refreshing.
read these things? You comment a lot about Ghana's economy. How seriously do you take things prepared by international organizations, sometimes with people on the ground? How useful are these things for understanding our reality here?
When I was outside the country, when I was in the US, it was easier to buy publications like this and also to get the economic intelligence units. The Economist likes to do a forecast of what is coming forward, next year, and they do a complete, analysis, an interpretation of what they think and how they think things should be. It always used to fascinate me, and I used to read avidly and base my own future on exactly where the dynamics of investments was moving. And at one point, the option was really, do you come back to Ghana or do you go to South Africa? Because that was the better alternative than coming to Ghana. But when you looked at the fact that you are a Ghanaian and you will be better able to relate in a country of your own, and you could understand and get to grips with what is going on a lot easier, I opted to come to Ghana. However, in the recent past, I think that major magazines like the EIU have missed the point completely and have predicted wrongly. Their forecasts have always been off. And I have found that the time period between a publication like the OBG has, which is a 2014 report which is currently available, and we're waiting for a 2015 report which is going to talk about what happened in 2014, for me is now a little too late, because I'm living the day-to-day fiscal and monetary operations of Ghana, even as we talk every day and every weekend on programs such as what City FM provides. So it becomes very difficult to read the analysis post the fact and know that the basis on which the predictions were built on and what the expectations are, are not there. However, for my purposes, what I need is not specifically what OBG is providing. I need something more current, more up to date, more manageable.
Not as reflective,
but more current and immediately analytical to my needs.
But the advantage of OBG and other groups would be, so they have data to compare across countries.
Yes.
So you do reports on 11 countries.
In Africa.
Yes.
So Ghana, Nigeria, Ivory Coast,
Gabon, South Africa, Kenya. We'll be moving into Djibouti and Ethiopia in the coming months. And then Egypt, Morocco, Algeria, and Tunisia as well.
So what strikes you about these countries? How similar or how different are they?
Well, it's funny that you mentioned that. I mean, I think that the similarities or the differences, that actually feeds into a common misperception about what Africa actually is in the international investment community. Despite the fact that Africa's standing, I suppose you could say, amongst international investors has really changed over the past decade or so. You know, The Economist 15 years ago published this cover that said Africa was a hopeless continent.
Yes.
And then a few years ago they changed their minds and said it was now Africa rising. Obviously the positive outlook that people have now is really refreshing in the sense that people don't think of Africa as a place of war and conflict and poverty. But at the same time, it still isn't necessarily better informed. There are these sort of misperceptions about what it means to do business in Africa. And one of them is the fact that Africa is not a country, that it's not a single market. And that's obvious to anybody who actually lives and works here, but it's not as readily obvious to overseas investors. And that was most visible with what happened with the Ebola outbreak. You know, people were afraid of going to Kenya when Ebola broke out in West Africa because they thought that they were at risk of contracting it there, despite the fact that you had more Ebola cases in the US, you had more Ebola cases in the UK than you did in Kenya. That plays out in the business realm as well, because what works in one country won't work in another necessarily. The M-Pesa mobile money program that Safaricom launched in Kenya is enormously successful. But when they launched it in Tanzania, a country right next door with a similar sized population, the uptake over the first year in terms of new clients and new customers was about 1/10 of what they had seen in Kenya. So again, there's these differences in the market that investors don't necessarily take into consideration when initially looking at
So
what's
which
going
African
on.
country impresses you the most?
Ooh,
Based on the work you've done.
That's tough to say. I mean, I think it really depends
Okay,
on
let me
what's
rephrase
going
the
on.
question. Which African country is doing well? Let's forget about what you think. Based on the hard numbers, the economy, resilient to all that's happening in the world, which African country would you say, based on what you've done, is really doing well?
If you gave me $100 million to invest in a country, there were two right now that I would invest in. The first, I'm not just saying this because I'm here, but the first is actually Ghana, in spite of all of the challenges and the turbulence that is going on. And the second would be Kenya. Those are two markets and economies where there is a really palpable sense of momentum. There's a real sense of change and dynamism. The underlying fundamentals are very attractive.
Really?
Yeah. And
So what would you invest in Ghana?
in Ghana,
Yes.
I would opt for agriculture.
Agriculture?
Yeah. I'm a big agriculture fan, and I think that there's a lot of scope there for increasing agricultural productivity and output, and also the benefits that would yield for Ghanaians as a whole, too, because that's an area where small investments can yield big results, not just in terms of profits for an investor or returns for an investor, but also for the communities that the crops are growing in, that the plantations are growing in.
So Ghana and Kenya would be two of the countries you would invest in, not because you're in Ghana, irrespective of Doomso, the
3Ds.
the depreciation. Oh, you know the 3Ds?
Yeah.
The Doomso depreciation. What's the third one?
Debt.
That's interesting.
Yeah.
Ghana would it be a long-term investment or short-term?
I would go long term.
Long term.
I think really when you're looking at these types of markets, you can't go short term, and that's part of the problem is that investors think you can go in and 3 or 4 years later you can liquidate your investment or sell it off, and that's not necessarily the case. You have to go in with a long-term time horizon and be willing to ride out some of the challenges like the 3Ds of dooms or devaluation and debt or deficit, depending. And if you can do that, then the benefits for your investment and the benefits for your customers, your clients, your employees are huge.
So you heard it first here on the Ghana report, Doomso, devaluation and debt. Those notwithstanding, Robert Tashima would invest $100 million in agriculture. You look surprised, Sydney.
Well, because he has just blown me out of the water.
You look completely surprised.
I'm completely surprised because I didn't think he would choose Ghana first. And I was hoping I could butt in and say I would choose Ghana because I have a 25% risk-free return on my treasury bills if I put $100 million into Ghana.
Forget agriculture.
Forget about agriculture. Just let me get some risk-free return and I'll be more than happy. But I think Robert has selected what is at my heart. And at my heart is that we can do so much more with agriculture in this country than we're doing. I am disappointed that we have lost our direction in that our finance minister is particularly perturbed because the price of oil has come down dramatically.
And not to cut you,
screaming.
viewers can see the trajectory of agriculture on the screen as we speak. So
is that a growth? Is
so
that a
it
growth or just
coincided
nominal?
with the lowest, the dip there coincides with 2011 oil. So,
Right.
so as soon as oil came in, agriculture came down in terms of growth rate.
Okay,
So that's the curve we're
So that's
showing. So agri came down, it's now trying to recover again.
Sure.
So you see 2011 has the lowest
Yes.
growth rate, and then it starts recovering again, coinciding with the growth. So but you continue your point. Just
Yes, you see, and it's good you brought this up, because every time I try to let people understand that when you start mapping rates of growth, you can have significant growth in 1 year, which will push your contribution, either in nominal or real terms in a particular sector, to say maybe 100 million. Seeing as Robert wants to put 100 million into Ghana, we might as well use 100 million. And now, if your growth on top of that is therefore just maybe 2%, you have grown to 102 million in nominal terms, whereas the previous time prior to your growth of 100 million, you were probably sitting about 60 million. So you've significantly increased your input into agriculture, except that because you had such a high impact the previous year, your rate of growth is slower, it's lesser, but you still increase the amount of investment into it. So it's very important when we look at rates of growth, we also look at the quantum, the actual nominal impact of how much money is actually really being invested into that part. So the hard numbers are always critical when you start looking at doing detailed analysis. But coming back to what we were saying, yes, I would invest in Ghana. I would invest in Ghana because I'm a Ghanaian. That's number one. And because I think that we can fix the problems in Ghana if we actually sat down and thought through what we wanted to do. I would also coincidentally go into Kenya, simply because Kenya is putting together some very, very good pragmatic infrastructure for leapfrogging, their economy. I particularly like what you're doing transnational and building railway networks across between them and the East African bloc and getting into the South Africa bloc as well, which makes it very easy, and which is what we need in ECOWAS, that we should have a highway that will connect us right through, so we could actually transact business across each country as we go forward. Now, if we can do things like that, and if we can even improve our e-money and our e-banking services, so it becomes easy for me to shop and buy in my other African countries, rather than actually having to buy from Amazon and from other places. It would make a lot more sense if we did that. So any country that is building infrastructure is at my heart. Any country that is actually doing something about improving its interest rates and reducing the pressure on the microeconomy is always welcome.
All right.
And that's where the challenge is.
So I'm sure your friend Fifi Kwete, Agri Minister, will be very happy with you that you have voted $100 million into his economy.
Yes.
But let's talk about the 3 Ds.
He just has to get up and do some work.
The 3 Ds, as you put them, Doomsaw, debt, and then devaluation. Let's start with devaluation of the currency. Is this, from what you did in 2013, 2014, is this a unique thing to Ghana? Or did it appear to you that this was a challenge commodity exporting countries are always going to face?
It's certainly not a challenge that's unique to Ghana. The depreciation of the CD has been paralleled in plenty of other markets in Africa. South Africa is one that jumps to mind. The rand is one of the most volatile currencies, and if you talk with any investor in South Africa, anybody who does business there, they will tell you that that's one of their top concerns, because they've got simply no idea where the rand's going to go. It's often used as a proxy for emerging market currencies, and so as a result, it tends to swing up and down with sentiment about emerging markets more broadly. And so it's been something that's been noticeable in other markets as well. I think for Ghana it's a real challenge because of some of the underlying fundamentals that it points to in terms of the current account, for example. But it's coming at sort of not an ideal time, because there's a host of other issues and challenges which are coming to the fore in Ghana, and with depreciation on top of that, it's really kind of exacerbating the impact of things like the drop in global commodity prices, like the slowdown in growth in China, which has knock-on effects, obviously, for Ghana. So it's kind of a perfect storm in a lot of ways. There have been, the rise in current spending with the government and the wage issue, for example, coming to a fore now. the drop in export revenues. There's all these things which have sort of been simmering away for a while, and which I think are now kind of bubbling up to the surface.
But you see, your business model of Agric and 100 million again, if you were importing your inputs to process pineapples, and you needed to buy stuff from Germany or the US, then the devaluation would affect you.
Certainly, yeah.
Now, so the question is, devaluation doesn't seem to be such a big problem, depending on what you're doing. Ghana's currency has been described as the worst performing in Africa.
Yeah.
Now, with this business model of yours, it will definitely influence what kind of business you do, if you'll be profitable or not. So how does that factor into investment decisions where a country's currency, not just the fact that it's losing value, but that it vacillates? So the government puts in $20 million every day for a week, it rises, and then it comes back down. How do you deal with that?
We've got to hedge, and that's the biggest thing. And you're seeing quite a lot of companies these days take that approach, hedging to offset the volatility that comes with the CD when they're importing not just inputs, but also equipment, really anything. Obviously, it's a boon for exports, but in terms of processed and manufactured goods, Ghana's exports are not quite at the level that they would be ideally, and so the benefits of that don't accrue as regularly. So the impact that's really felt in the Ghanaian economy is through the imports, like you said. And as a result, if you're looking at an investment, you really need to take a very prudent approach to hedging against that, and factoring that into your business costs and your overall overhead.
See, do I take it that multinationals see things differently? Because when I speak to AGI guys, they tell me that the CD is killing them.
Yes.
The doomsaw is killing them.
Yes.
They import their inputs. It's difficult. They're laying people off.
Yes.
This guy wants to put $100 million into this economy, into agriculture. He doesn't seem to see anything wrong with what's going on.
Yes.
How is doomsaw going to affect you in your, devaluation, the CD? Because you've complained about this a few times.
Well, I'm always complaining about doomsaw. I think it's the heart of our problems. But if I look at agriculture and how you want to manage doomsaw in agriculture, then you go solar. Out there in the hinterland, a good solar system that powers your irrigation and that gives you enough light at night is all you need. You don't need much more than that. So you could mitigate, the depressing side of doomsaw by doing that. It's a pity that a country like ours, where we have enough photovoltaic energy to be able to blacken this place out or lighten this place up with solar, is not taking that opportunity seriously enough. And we can do it because you have so many arrangements going on. We have economic partnership agreements with Europe. We have an Africa Growth Opportunity Act with the USA. We import from China very easily. And just that, the kind of imports we're getting from China are the cheap ones. And the what should I call them? The piddly ordinary trader, things that don't really push the economy forward as much as you would like. So, see, hedging the currency is, yes, it's a good way to look at it. But the fact is, you're hedging a currency that virtually is bottomless because you don't really know what is driving the depreciation or the valuation of the currency. Topically in Ghana last month, Bernard alluded to it. We said the Bank of Ghana was going to put $20 million a day into the economy to try and rescue the currency. We were on radio. I was the first, I think, to say the day. I think they announced it on a Thursday. On Saturday, we had a radio program, and I said, poo-poo shit, sorry.
It wasn't going to work.
It wasn't going to work. They don't have the money, they can't sustain it, and it won't go anywhere. Well, the price came, the CD appreciated by some miracle. I don't know who announced the rate. I think the Bank of Ghana itself announced the rate. When it should have been something should have been done by the Ghana Statistical Service, who are the monitoring agency. But the central bank announced the rate, that it had gone down. Many people lost the money, lost a lot of money. I did. And then within a month, it's back up where it was at the beginning of the period. So you didn't really do anything except to heighten expectations and create a media frenzy.
And greater volatility.
And now we are back again saying the currency is back up. We're still going to carry on putting more money into it. And you're creating a speculator bonanza because they know you can't sustain it. So they're just going to sit and wait and then hedge you this way and hedge you the other way and keep buying CDs when it's convenient and selling CDs when they need to and buying dollars. So you are putting yourself into a very, very precarious situation when you continue to try and intervene in a marketplace which is not working. But go back to what Bernard was saying. What percentage of my manufacturing cost is imported? And that's the real issue that we have to address.
Yeah.
That for as long as we keep importing products and our producer price index keeps going up, because we are subject to a depreciating currency that seems totally uncontrollable, you're going to have the speculator factor in bringing in goods and pricing them beyond a certain range because they expect to replace the cost of capital in order to be able to carry on and import the next batch of inputs. So we are now in a cyclical circle. And I don't see a way out of it unless we turn to your $100 million
we'll talk more about that.
Thank you very much.
When we come back.
Agriculture.
This is the Ghana Report. We're talking to Sinikisli Hayford, who is a financial analyst, and Robert Tashima from the Oxford Business Group. We're discussing Ghana's economy, looking at how the Africa market is working. A couple of days ago, Setekpe came to media, to Finance Minister of Ghana, of course, to ask for a review of his expenditure and also of his revenue targets. We understand China coughed and the world caught a cold. We'll talk more about that when we come back, plus your messages. This is the Ghana Report. Don't go away.
Boys, all new season coming soon, only on Vice at 1.
Pilantimuni, leptilogo watenzo yum pishinai. Ne sanganda dara, nanda bone shira, nebatmain bone ba, network shelda melbourne mama, rabum de mami, and something joining Vodafone Business Solution. Red Business Package Mazo. The Chemical meaning to Tumamaza at the bone tab free. So Vodafone Business Solution, Chemical ready business.
Join Vodafone Business Solutions, activate the Red Business Package, and enjoy free calls among your colleagues, bonuses on all top-ups, and more. Visit any Vodafone shop to sign up now.
Vodafone, power to you.
There is this new generator set we would like to introduce to you in this era of power outages.
I hope this time around you're going to give us something better.
Yes. Let's go out and have a test run.
Hey, you call this box a generator? Get a quality one from Untitled Electrical Engineering Services.
Come to Untitled Electrical Engineering Services for a permanent solution to your power problems. We do 24/7 after-sales service, sales of spare parts for all generators and cables, and we repair all generators even if you didn't buy from us. Locate our head office at number 77 Anointed House off of Dokomala Main Road. Anointed, the generator experts.
4 in the morning, and I'm zoning. They say I'm I keep it 300, like the Romans, 300. We're the Trojans, baby, we living in the moment. I've been a menace for the longest, but I ain't finished. I'm devoted, and you know it, and you know
it. Okay, my love, what do you want to eat? How about this?
This is why I woke up.
You like this, right?
I ate that because I love you, but please, for once, just give me something yummy. I beg you.
It's got to be healthy too. How about this? Yumvita.
Yumvita?
It's easy to digest prebiotic formula, has 16 essential vitamins, minerals, and omega-3, and is easy to prepare. That's Yumvita.
It's yummy.
Yumvita, a delicious way to grow.
Efficient, active, powerful, radiant, irresistible. Clear Men is a full range of skincare designed for men to enhance their skin tone. Clear Men, attractive skin every day. Dream Cosmetics, your dreams come true.
A cheetah can reach speeds of 90 kilometers per hour in 3 seconds. Big Crystal ink dries even faster. Big Crystal, it makes the grade.
Some nights you will never forget.
Like I said, following the mother's movements would be no problem.
Andrew Ballerin's wife claimed they had no access to alcohol. So where did they get it?
She just did. Why would I lie about this?
CSI Miami, Mondays at 10 p.m. Only on Viasat 1.
Welcome back. This is the Ghana Report. We're live on Viasat 1, and I'm here with Sydney Kesley-Hereford and Robert Tashima. Sydney is a good friend of ours, financial analyst who writes quite a lot about Ghanaian issues. Robert Tashima is the Africa editor of the Oxford Business Group. Sydney, last week, Finance Minister Seth Terkper appeared before media men to review his revenue targets. This morning, Toma Emihir said to me there were 2 reasons for that. China's mini slump and the U.S. quantitative easing. Do you agree?
No.
You don't agree?
I disagree completely.
So why did Mr. Terkper come to us?
Mr. Terkper came to you and us, the people of this country, because for the last 7 years, he has been talking about the midterm solid turnaround.
Okay.
That will come very soon and will be on the back of the gas findings in the Trinidad and Temuri the 10
yes.
Fields, as they call them, and also the oil that he expects to be generated out of that. And his expectation was that he will be selling that oil above $90 a barrel. Okay. Now that price is now $45 a barrel. Okay. So all he's coming to tell you is that 10% of his earning income, money that he expects to get from oil revenue, is now going to shrink down to about 5%. He doesn't expect that he's going to get anything more than that. And he doesn't see any recovery in sight. Because it doesn't matter how much you pump out now, the price is going to keep coming down. And the mistake an oil country can do now is to increase its output. Even Saudi Arabia, who has the capacity to do it, is not doing it for the very simple reason that the USA, with its shale find, is able to drop the price of crude to such a low level that they can operate technologically far more superiorly at 29%. That's $29 per barrel.
Yeah.
So if you want to now, the base price for crude oil is going to be pushed by shale in the USA. And the minute USA is beginning to pump out shale, others are going to start copying. And if they find shale also, that's the end of fossil fuels.
So you're saying that the oil price, which we understand at $45 a barrel, is at a 6.5-year low.
Yep.
It's going to be low for a while.
America can afford to go down to as low as $29 a barrel.
So what you're saying is that the finance minister should not say that because he's going to lose some revenue, oil revenue going down because of low oil price, he's coming to review his figures. He shouldn't say that.
He should not even be coming to us to talk about the impact of the loss of revenue in oil, because the oil revenue, all right, that contributes to our income, the total income in the country, is less than 10%. It's less than 10%. This is the case of the tail wagging the dog. It's so simple. It's very, very little. The bulk of our
So he's using the oil as an excuse.
I think he is using the oil as an excuse, and he has always used the oil as his future prediction.
Do we even know if we're a net importer or exporter of oil? Reading your magazine, I wasn't sure. In 2014, you predicted that by 2015, Ghana may be a net exporter of oil, which seems to me that nobody's really clear if Ghana is a net importer and exporter. Because if we're a net importer of oil, we should be excited that oil prices are lower. You get me? Because if you spend more money importing oil, the lower the world price of oil, the better for your country, because you need crude to power your power plants, you need crude to process for petrol. So do you have data to tell us whether Ghana is a net importer or exporter? Because I don't know. I don't know if you do.
Oh, I have an idea. But let Robert tell us what he thinks.
I don't know.
Should be interesting.
Well, as far as I know, the country is a net importer of energy in general, and that includes gas as well as oil. And I think that, to be honest, when you're taking a look at the Ghanaian economy, the commodity that has a bigger impact on what's going on in Ghana is actually gas and not oil so much, because the gas is being used for power production. Gas is what's supposed to be coming through the West Africa gas pipeline and isn't necessarily always. And it's a switch from gas to
yeah, but not to catch you. If you go to the screen, we're showing you the contribution of crude to GDP. Again, before 2011, there was nothing. So it's quite significant. You're saying that you don't believe lower oil prices should affect Finance Minister that much?
No.
But these are projections.
Yes, they are projections. And I'm saying his projections were premised on the fact that the price would be above $90 and that we would keep generating as much as we are now.
Yes.
So he planned it when we discovered oil in 2012, that we would generate 120,000 barrels a day. That 120,000 barrels a day at that time was pegged at $114 per barrel. So there was significant contribution from that oil to the economy. Now, as time has gone on, we realized that we couldn't do 120,000 barrels a day. We're barely operating between 80,000 and 95,000 barrels a day. So that itself is a volume decrease. Then now you have a price decrease. So you've been hit by both sides of the value equation.
So hence he comes back to Parliament to say, I have to review my revenue expectations.
What does he expect Parliament to do? There is no money coming from anywhere else.
So he's going to cut. So he told MMDAs to reduce expenditure. Government is going to increase tax revenues from other sources, so that we're essentially cutting our coat according to our size, if I understand what he said.
Government is going to increase tax revenue from what other sources? There's nothing else.
They've introduced tax stamps. So, for example, Monacote said recently that itinerant traders and people in the informal sector will be taxed more, so that would cater for the loss of revenue from the oil side. That's what they said.
It's not the answer, Bernard. We've been saying, I have been saying, and I know friends also who agree with my mindset. We've been saying for a long time, what government needs to do is to figure out a way of taxing the informal sector on their income, not on their stamp duties. Stamp duties are 5 cedis a month or 15 cedis a month or something like that. It is completely insignificant in comparison to the income generated, the taxable income that is generated in the income sector. We are saying that the informal sector, which is these group of itinerant traders and those in the marketplaces and those who don't have a formalized employer, who are independently employed, actually have or contribute something in the region of 60% of the GDP of this country. That 60% is not being taxed on income.
But to be fair to Finance Minister, what's happening in China is not just about oil. So there's a general slump in demand for commodities. Now Ghana exports oil, Ghana exports gold.
Yeah.
The gold price has fallen.
Ghana also exports cocoa, don't forget.
And the cocoa price is not doing as well as it did in the past.
Sure.
So his major pillars for revenue, because of what's happening externally, have had to come down.
Yes.
We haven't even spoken about what US quantitative easing will do to his euro bond and how that's going to affect the coupon rate.
Sure.
So his borrowing capacity is going to be reduced. He's going to borrow the same amount at higher price,
higher cost.
Yes. And his major commodities, he's going to earn less from. These are external factors.
Yes, and he can't control those factors. There's nothing he can do about the price of crude. We are not a major player in the crude oil industry. We actually generate far less crude than Nigeria has crude stolen. In Nigeria, they are stealing about 150,000 barrels a day of oil,
and we're producing 80,000.
And we are producing 80,000. So we're not even matching Nigeria's theft ability of stealing crude. So we are by far such an insignificant player in that oil market. That's number one. Then number two, you have to look at the way our economy is structured. You see, we have a very high inflation rate. We are inflating at 17.9% currently. All right. Everywhere else we are importing from have inflation rates less than 5%. All right? Less than 5%. So we are not importing, we are importing at a far cheaper rate than we are actually inflating this economy. In so many words, that whole thing doesn't make sense, because we should be bringing in inputs that are far less volatile than what our own economy is producing. So we got something wrong somewhere. In fact, we have a screw loose somewhere in the whole economic structure. But go back to Robert's $100 million. Take that money and invest it into agriculture. What are the significant things you want to do in any economy? One, you want to feed your people. There must be enough available, affordable food so that people will be at least able to buy things on the market, number one. Number two, you want to generate employment. You want as many of these youth on the streets to be gainfully employed. And the best area to put them in is in some kind of a semi-manual system, which has to be agriculture, because we have the land, we have the light, we have the soil, we have the breeze, we have the water. So it makes a lot of sense to put money into agriculture. And then the third factor you have to look for is you want to stop the volatility of pricing in the marketplace. You need people to predict their short-term life and leave the long-term issue to their God. Okay? Between now and next year, I want to know that if I have identified a car that's going to cost me 20,000 cedis, and I want to buy that car, I'm going to save enough money throughout this whole year and buy that car next year. I want to be able to go back next year and it still is 20,000 cedis.
So is our
and not
economy going
30,000.
to get worse before it gets better? I'll come to Robert shortly, because now we've admitted that it's going to cost us more to borrow. And Mr. Tekwe was going to lead us on a new roadshow. Now we understand that with the hike in interest rates in the US, that's going to affect the coupon rate we get for our euro bonds. So that means that we're going to borrow at a higher cost. And if you look at all the things we said about oil, gold, and cocoa, it means things could get worse before they get better.
Yes.
Is that a fact?
But Bernard, okay, that is a fact, because we are caught. At this point, we are really caught. So there's nothing much we can do than to take some money from somewhere. But you've got to take that money and use it for better purpose. Better purpose. And the better purpose in this instance, and this is why I can't disagree any much more with Robert, it has to be into agriculture.
You're still talking agriculture?
Yes. It has to be agriculture. That is the clear way of getting this economy started and moving up again. It's either agriculture and or housing. They are the two critical pins of any society. You need to read what other people have done and turn around. And you know, I'm a big fan of the Singapore experience. So don't let me go there.
Okay, so let's talk about debt. Ghana's debt-to-GDP ratio is hovering around 60%.
No, sir, it's 123%.
What percent is it?
Robert, what percent is it?
The number we run with is 70%.
It's 123%.
How do you calculate that?
You calculate it
because the
taking,
IMF figure I checked was around 60%.
Forget about what the IMF is saying. The IMF is recanting only numbers that the government gives them. Look, if you just simply take the medium-term review that Tekwe came to talk to us about 3 months ago, and you look at the components of the foreign debt in the equation, when he did that calculation, which is the figure that Robert and his team are always picking, he said it was 67.73%.
Yes.
And he predicated that on an exchange rate of 3.2 to $1.
Yes.
Which is what it was then, because that was the lowest dip point for the currency appreciation in the month of August. Now take that figure today, and it's currently 4.3 to $1. All right? So already you need to increase that figure by 33%. So take my 67, 70%, add another 30%, you're way over the top.
But so that's in CD terms. But what if you did the debt in dollar terms? Would you have the same amount?
It doesn't
Would you have the same ratio?
You can do it. Everything
because
depends on what rate you use.
So you're saying that even though OBG says our debt to GDP ratio is 70%, Tekwe says it's 67%, you say it's 123%.
Yes, because every time you calculate the figure, because you have a dollar component in your debt, every time you calculate that figure at the prevailing exchange rate, that figure changes. The debt nominator goes up, your denominator stays the same. Ghana's GDP is between 110 and 115 billion cedis. It doesn't change that much. It's a figure that is quoted by the Ghana Statistical Service. And they do that calculation based in cedis, depending on the parameters they use for calculating the GDP.
Okay, the IMF gives a few figures. Germany's debt to GDP is 81.9. Greece is 158.5. Cape Verde was the highest I saw in Africa. I think Eritrea 125, Cape Verde around 103. From where you sit, Ghana's debt, whether it's 70, 67, or even 123, how much of a problem is that? for investors and for the economy?
Well, I think ultimately the question of debt is a very tricky one, because you also have to look at not just the volume of debt and the amount of debt, but the ability of the country to pay. The U.S. has a debt-to-GDP ratio of somewhere above 100%, which is obviously, I mean, that's trillions of dollars worth of debt. So volume-wise, that's a hideous amount. But at the same time, creditors believe that the U.S. will be able to pay that back. Now, if you believe that, well, you have a very sort of, you're a very honest and credible person in that case, because the U.S. can't seem to figure itself out when it comes to paying back that debt. And they constantly have to fight to raise the debt ceiling every year. I mean, it's an annual budget review that the Congress goes through. I think when it comes to Ghana, the debt-to-GDP ratio is, perhaps not surprisingly, roughly in line with a lot of other African markets. You're looking at most of the big African markets, you're looking at somewhere between about 40 to 60, 65%. The big question comes, though, how do the countries pay that back? And certainly the effect of depreciation, when you're paying foreign currency denominated debt, that is a big concern. And when you're running a current account deficit, that is a big concern. And so really to ensure that debt does not become a problem, at this level, debt does not necessarily mean that it will be a problem for Ghana if it can regulate all of the other challenges that it faces. But doing that is a big ask. And so that's why there are questions being asked about the sustainability of this debt.
When we come back, we'll talk about sustainability and also talk about why most African countries don't trade with each other and why they still export things raw. What can we do about that? This is the Ghana Report. We're live on Viasat 1. Send us a Twitter comment with the hashtag The Ghana Report. We'll be right back.
It's a morning show made just for you.
Together, we make you look forward to every morning.
This morning, every Monday to Thursday at 7 a.m. only on Viasat 1.
Timuni, Liptigo Watenzo Yumpishinai, Nation Dara, Nanda Bone Shira, Nevertime Bonaba, Network Shelda Melbourne Mama, Ram the Mummy, and something journey. Vodafone Business Solution. Red Business Package Mazo. It's a meaning to Maza Katabona tab free. So Vodafone Business Solution. Chemican ready business.
Join Vodafone Business Solutions, activate the Red Business Package, and enjoy free calls among your colleagues, bonuses on all top-ups, and more. Visit any Vodafone shop to sign up now.
Vodafone, power to you.
Efficient. Active, powerful, radiant, irresistible. Clear Men is a full range of skincare designed for men to enhance their skin tone. Clear Men, attractive skin every day. Dream Cosmetics, your dreams come true.
4 in the morning, and I'm zoning and saying, I keep it 300, like the Romans, 300, where the Trojans, baby, we living in the moment. I've been a menace for the longest, but I ain't finished. I'm devoted, and you know it, and you know it.
Do most of your professors wear glasses? Make the grade and write with a big crystal. Big Crystal with remarkably visible ink. Big Crystal, it makes the grade.
For
for sales and service, visit Japan Motors on the Graphic Rail in Accra or any of our showrooms nationwide, or call 0302-682-223 or 0302-682-220.
Has your TV ever gotten frozen, stuck, or static during the final moments of the match? Big Crystal, with ink to keep you moving through your finals, start to finish. Big Crystal, it makes the grade.
Catch the latest movies across Africa.
Are you not old enough to marry? All others, some of your mates have 3 children, some have 2.
I bind you in Jesus' name. You bind me? I don't bind you. Stop to cooperate me. I rebuke you in Jesus' name. Oh, you don't fire.
From Cape Town to Cairo, leaders are just siphoning the money and banking it in Switzerland.
Pan-African movies, Mondays and Tuesdays at 10 p.m. only on Viasat 1. Brought to you by Airtel.
Welcome back to the Ghana Report. We're having a very interesting conversation around the world economy, but specifically Ghana and the African situation. Sydney Kesleyford, Robert Tashima, my guest. Godwin Otute on Twitter says, Bernard, Sydney is right. Setekbe should spare us all the ordeal. Hashtag the Ghana Report. Kofi Odrojating says, no matter how low the oil price gets, devaluation of our currency would not help our case. And he has the hashtag the Ghana Report. And Idodopoku says, I wonder if in 2 to 5 years' time, students will be learning about the 3 Ds, like they do the 5 Ps. You know the 3 Ds, Doomsday, devaluation, and
debt.
And debt. Okay, so Sydney, let's talk a bit about the African situation.
Right.
Because the economists today said what happened in China will not affect developed countries. It's going to affect commodity exporting countries, Zambia, Ghana, Kenya, Mozambique, Angola.
Nigeria.
And then he also said that only less than 20% of what Africans export is manufactured.
Yes.
It's all raw. Why is that the case?
Oh, it's the case because it's been like that for a long time. And if you take Ghana as a typical case, Ghana really has only just recently come into democracy since 1992, I would say. Prior to that, it was a complete mess. In fact, even from 1992 to 2000, it was a tricky situation. But we've been so out of balance, with so much turmoil, with major coup d'etats, and out of sync with the rest of the economic community and the rest of Africa. It has become very difficult to actually develop trade links amongst ourselves to make progress. But the big question you really want answered, Bernard, is what are we going to trade? Okay, what you want?
We can trade milk. Patrick Lumumba said to us that Kenya has a milk glut. We buy milk from Switzerland.
Yes.
There's a maize glut in Southern Africa, and there's a shortage of maize in West Africa.
Yes.
We haven't developed the infrastructure to allow us to trade with Kenya, Uganda, Nigeria. But we do need things from each other. So I don't buy the argument that we can't trade anything with other African countries. The infrastructure doesn't exist, but the need does exist.
Well, you see, if you can buy maize from South Africa cheaper than you can get it from America or somewhere else, then the answer is yes.
But that's infrastructure. Because it's cheap. It's easier to fly to London than to fly to Djibouti.
Yes.
Even though Djibouti is closer.
Yes.
And for 50 years, we've not been able to change that.
Yes.
So I think you should be talking about infrastructure, how to enhance trade. But the need is there. The argument that African countries are too similar, I don't buy that argument.
Well, let me ask you a simple question.
Yes.
Why would I be going to Djibouti? What am I going to go buy?
That was just a hypothetical example.
Well, yes, and I'm using the hypothetical example, so don't take the name Djibouti as Djibouti country.
But people are setting up businesses in Liberia, Gambia. Ghanaian banks are in Gambia, Sierra Leone, Liberia.
Yes.
Nigerian banks are here.
Yes.
South African businesses are here.
Yes. For me to fly frequently to Liberia and back, there has to be some opportunity out there that is pushing me to go there to do business.
But the West is flocking here.
Yes.
Chinese are here, the Indians are here, the Americans are here, the British are here. OBG is here. This is a big market for them.
Yes.
But so too are other African businesses. I mean, you're seeing Moroccan financial institutions spread out. I mean, after the global financial crisis, you saw the French banks and European banks move away. All of a sudden, the Moroccan banks move in. You see Nigerian banks move in. You're seeing South African retailers open up.
Yes.
So you're beginning to see that expansion going on. But I think the problem isn't just infrastructure, like you pointed out, but it is also the execution of the agreements. I mean, you're supposed to have
all these in place and they haven't been signed.
But we can say, Robert, that the countries that are prosperous, the US, the EU, to an extent, they like it the way it is. They benefit from, they get cheap raw materials from here, and then they take our cotton to produce textiles, and they sell it back to us.
And I think that there's a real need for two things, really. And a lot of governments, including the Ghanaian government, have started pushing this increasingly as a strategy, and that's local content and value addition. And they're two different concepts, but they really go together hand in hand. I mean, you can't have one. It's a little bit like Banku and tilapia. You can't have one without the other.
And here's where I fault Robert, because Robert talks about value addition and what's
local content.
Local content. Don't believe everything that is said and that is handed out on paper in Ghana. Executing the law itself and executing the policy are two different things compared to it. We don't execute policy. We just talk about them and nothing ever comes through. With all of that, the biggest problem you have is you need commercial and trade activity to get me to move from here to another place.
Let me ask you a final question. In page 34 of your publication for 2014, let me read. You said, Ghana's business climate is very liberal for investors. Only a few sectors like small taxi, beauty salons and lotteries have outright ban on foreign participation. And then you said, among the conditions favorable for investors are a free floating exchange rate regime, guaranteed repatriation of investor profits, and legal protection against expropriation and nationalization. Ghana is like the haven for international investors. Just come in, make as much money as you can, and your clients love this. But it's terrible for our city, because all the money is going back to Nigeria, to the US, and to China, and it's killing our economy.
Well, it's not good for the investors either. I mean, as we heard, one of the big concerns for investors is depreciation. So ultimately, what an investor wants is policy stability, and within policy stability, and that's something that Ghana has quite a lot of, but within that are concerns over whether the government's going to manipulate exchange rates or whether the government's going to constrict or expropriate assets or change regulations on a whim. And that's certainly not something that has happened in Ghana recently. I mean, there are certainly examples of that, very pertinent examples in other markets.
Sydney, should Ghana be a bit firmer like Nigeria? Because we're told that they nationalize their banks, they have significant shareholdings in significant companies. We seem to be too nice.
Nigeria could afford to,
and it's killing our city.
Nigeria could afford to do what it did because it has significant oil reserves. So nobody in the international scene can ignore Nigeria. If you kick against Nigeria, if the US kicks against Nigeria, Nigeria will sell its oil to China or to Russia, and they will buy. So you cannot.
But we have gold, we have cocoa, we have some oil, we have bauxite, we have diamonds. Isn't it a question of lack of strong leadership? Because there are countries smaller than us, like Botswana, who've managed to benefit more from their minerals. So the size question is really not here nor there.
And we are only 25 million people, or 26 million at this stage. And we should be able to raise our per capita income without too much sweat. And yes, we have gold. Don't forget, we have the 7th largest mine in the country, but there's a lot of galamsey going on, which is extra additional revenue that nobody notices. And then, of course, you've got cocoa, and cocoa is doing moderately well. It's not exactly impossible, but it could do better. But we have other commodities that are really very much in demand. We have shea nut trees in this country naturally across
So we should produce more raw things and export.
No, you need to add value in order to create the employment, because if you just export, you are not really generating employment. So you need to add value. But you don't necessarily have to add full value if you can't comply with the European standards or the American standards that are required. You can provide to a semi-processed state that is adequate enough to give enough employment, and then export the semi-processed state until you are ready to create your own internal economies. But for now, we are just not a country that has clout.
Thank you very much, Sidney Kingsley Hayford. He is a financial analyst and also a columnist. He does a very interesting column every week, and of course he comes on a couple of radio stations as well throughout the week. He was here as our agent provocateur. And Robert Tashima is the Africa editor of the Oxford Business Group. They have a very fascinating publication. Great talking to you, Robert. Great talking to you, Sydney. My name is Bernard Avle. I've enjoyed myself. I hope you have too. Keep watching Varsat 1. Good night.
Smell the excitement in the air, hear the roar of the crowd, see the city cheer you on, feel your heartbeat, settle the nerves. As I take you through the latest in sports news, through brand new segments like the Experts Corner, Sports Personality Interview of the Week, Ghanaian Players Abroad. Well, buckle your couch bells and join me on Sports Extra from Monday to Thursday as I bring you the latest in sports news in 45 minutes on Varsat 1. I am Thierry Nyash.
Sports Extra, Monday to Thursday.